Hi guys, and welcome back to the channel. Now it's been a little while since I did one of these updates. I hadn't quite realised how much time had passed, but the last one I did in May, and quite a lot has happened since May. For anyone new here, this is a series where I share the updates of the junior stocks and shares ISA portfolio that I'm building for my daughter. I opened the account last September, and ever since I've been adding small, regular contributions into a globally diversified fund. The whole idea behind this is steady investing over the long term with no hype or no complicated strategies. Now, even though we are focusing on a junior ISA here, in the bigger picture that's somewhat irrelevant. If you're thinking about investing for yourself, then the same rules apply. You'd simply put this into a regular stocks and shares ISA rather than a junior ISA. It's the same principle, keep it simple, keep it diversified and stay consistent. Normally I'd give a quick market update, but on this occasion I'm going to dive straight into the portfolio. Let's take a look at how things have been shaping up over the last few months and where we are today. Okay, so jumping straight into the portfolio here, you can see straight off the bat that we are 100% invested in the global all-cap index fund accumulation fund. Now that accumulation piece just means that any dividends that would have got paid have been automatically reinvested within this fund, so it's very much a hands-off approach, not having to manually reinvest any dividends, every quarter or every month. Straight off the bat, we've got our total cost. So this is the total amount of money that I've put into this ISA over the last 11 months. So it'll be 12 months next month. I can't believe my daughter's almost 1, which is pretty crazy to think, how time flies. And you can also see here the current value at just over, almost £1,700. And we've had a total gain of just under £150. So if I delve a little bit deeper, let's have a look at what exactly that looks like. So here we can see 7th of September. There we go. So 7th of September is when I opened this account and deposited around £500. This was money from my daughter's birth, from gifts, from friends, from family, and put all this together and decided to invest it. Since then, you can see these sort of small increases. And this is the regular amount that both my partner and I put in. So we put in around £60 a month, just to keep those steady contributions, and so it continues building over the long term. You'll also see a couple of steep rises. So this was around sort of Christmas time. So my daughter received a few more sort of monetary gifts around that time as well, which explained a bit of a jump then. And then since then, it really has just been the sort of £60 each month, paired with the natural market gains. So you can see here how it's grown, and yeah, we're currently sat at just shy of £1,700, which is a lot more than I had at 11 months old. So I like to think she's off to a really good start financially in her life. So yeah, covering the basic figures there. This is currently giving us a rate of return of just shy of 14%, which, when you compare that to a normal cash ISA, which I believe, off the top of my head, the interest rates are around 3.5, maybe 4% at the moment. So the fact that we're heading towards the 14% mark in 1 year is great. If I now look at by month, this is always really interesting. And since we've not done an update since March, we've got a few months to cover. So what we'll do is start around the Feb and March time, recapping what we covered in one of the previous videos, but also giving some explanation into what can happen in the market if you're looking to invest yourself. So the start of the year was fantastic. Then there was quite a few political things that went on in the world, including the sort of tariff wars, obviously led by Donald Trump, and this did send the market into a bit of a tailwind. So you can see quite heavily how we were up at almost £92 in gains here. That then started to dip quite drastically in Feb, March and April at kind of the height of all this market, change in sentiment. So yeah, at one point we were even at a loss of £44. But since then, May, we started to see that market recover and the market stabilise a little bit. June continued on this streak, so again, we gained around £61 or £62 in May. In June, around £40. In July, £76, a really strong month. And then so far for August, we've gained just shy of £15, which puts us up at a new all-time high at just shy of £150 growth within those 11 months there, not quite 12 months. And what I want to show you here is that when this would have happened, a lot of people would have panicked and pulled the money out thinking, I'm going to lose all my money, Instead, look at what we've done here. The strategy didn't change at all. This is the purchase and withdrawal, so these are the purchases. As I mentioned, we put in £60 a month. Whilst the market was low, we kept buying, £60 worth on the first of every month. And what that allowed us to do is when the market was down, we were buying, essentially portions of this fund at a discount whilst it was down, which then brings our average cost down. And by doing this, when the market does rebound, as we've recently seen, we've been buying at a discount and now we're going to make extra gains on those additional bits that we've recently bought, which you've seen here. We had a bit of a scary moment here. Obviously, I wasn't too concerned, but a lot of people might be concerned looking at that. And then we've come out the other end much stronger. So the market is like that. The market goes up and down. But I think the main thing to think of is that it doesn't last forever. Take advantage of the market dips if you have any spare money. Take advantage of this and buy in on the market dip. You probably hear a lot of people say buy the dip, and it really is true. And we've managed to do that, but without really changing any strategy. I invest on the first of the month, whether the market's high or low. That consistent approach ensures long-term growth and that long-term approach. So, yeah, almost £1,700 in the account. Really happy with how things are going. Obviously, we don't know what the future holds for the remainder of the course of the year. We don't know what might happen politically or within the global markets. We might even see this dip again. But overall, we're on the right trajectory. And coming back to this graph, yes, even though we've been putting bits in, it's still doing that steady climb. As the amount over the years grow in this account, each time we get a couple of % growth each month, that value will be much higher because, say, 3% on £5,000 is obviously a lot more than 2 or 3% on £1,000. So that compounding and snowballing effect really takes a bit of time to get off the ground, but eventually turns into that snowball, and that's when the gains really start to come through. Touching upon the Insight tab, which I always do, I like this tab on the Vanguard platform, and it's a nice graphic that a lot of the other platforms don't have. The other platforms will tell you the percentage split, but I quite like this, showing on a map exactly where our money is. So you can see we're globally diversified. Largest holding, no surprise, in North America at 67%. After that, we've got Asia Pacific at 11% and also Europe at 11% as well. And this is really just mirroring the FTSE global, all world index, and that's really what we want to do. Instead of putting all our eggs in one basket, saying the US market, the UK market, for example, if that particular market has a real drought and is quite tough for a few years, it's going to pull all of your values down. Whereas if you spread out, diversified globally, anytime there's a bit of a gain in any market, we're going to be capturing that. So that's a really important part of it. Top 10 investments, again, because we are so heavily invested in North America, no surprise that you've got your Apple, your Microsoft, your Nvidias, your Amazon in there. But then also we've got one from Asia over here, Taiwan Semiconductor. So again, becoming quite a big player in the global markets. So we've even got almost 1% of that in there as well. Sector allocation there, technology, as you'd expect, is sort of the biggest market at the moment, followed by financials. So that's just giving us a bit of a snapshot of our split of where exactly our money is, and then a little snapshot at the bottom of the last 3 months. So that's where the portfolio is currently sitting, and as I always say, investing is a long-term game. The numbers will move up and down month to month, but it's all about letting time do the heavy lifting for us. As I mentioned before, on a more personal note, my daughter turns 1 this month, so I imagine in the next portfolio update we might have a little bit of an uplift if we've had any monetary gifts. I'll be putting a lot more data into the next video, doing a full 12-month roundup. I'm even planning to do a full comparison against this portfolio and also what we may have returned in a simple cash ISA. I think that'll be really interesting to see side by side. That's it for this update. If you found the video useful, do consider giving it a thumbs up and also subscribing to the channel. Thanks for watching, and I'll see you in the next one.